talk about another one. Ponzi. Everybody's heard of what a Ponzi scheme is. Pyramid scheme. It originated, I think it was back in the 1800s by Charles Ponzi, hence the Ponzi scheme, where he just figured out that, oh, if I have people invest and then pay other investors a return from their investment, guess what? Those original people want to keep their investment growing at an expedited rate. They're going to refer and bring in more investors. Then those investors are going to keep bringing in new investors. Ultimately, it goes up to a pyramid where the funds flow up, but they also flow down to create the returns for investors. At some point, the pyramid crumbles because there's not enough money coming in to continue to pay the returns that are being expected. And ultimately, it will all collapse. It is a win, not if, though. Because let's be perfectly transparent. Madoff, one of the biggest Ponzi's, the biggest Ponzi scheme that has ever happened in the world. Billions of dollars were taken. This guy, it was a NASDAQ chairman or board director, Madoff. He was had his own broker-dealer. FINRA had been looking into it. He was an investor and a trader. He was delivering amazingly 10% returns to all of his investors consistently over the years. What he wasn't showing is the way that he was hiding money into areas and places that there really was no more money there, using that to deliver those 10% returns, and then pocketing billions of dollars personally along the way. That is the biggest example of a Ponzi, but they are constantly happening. And I'll give you a couple more examples of those, but I will share with you one of the most hilariously funny investment offers that I've ever seen. And it was when I was living back in Las Vegas. And they were, let's see, I'm going to add a banner for this because it's great. There was a ad, big quarter-page ad in the newspaper. Are you looking to invest? Invest now in Madoff investments. It was hilarious. And for years, I had that ad because I just saw it in the normal course in a frame on my wall, Madoff investments. It was great. It was a couple months later, see another news article. It was from the Nevada Secretary of State saying that they've taken action against Madoff investments. Turns out it was a big joke. It was a dentist, so just wanted to have some fun with it, bought this ad, put it out there. So there really was not a solicitation of funds, but he had to promise to never try to raise capital again still, just because of that absolutely hilarious joke. All right, let's cover actually a few more Ponzi's and what they look like and what you should be looking out for. One of them, again, I know these guys, they went to prison. I didn't represent them. In fact, their attorney went to prison with them. But this was this whole, for them, and I'll talk more about this as well, it was a diamond deal. Hey, we're buying these conflict diamonds at this deep discount. We're bringing them over to this market. They're cleaning off the conflict issues around them, and then we're able to sell them for gobs of money. We're borrowing funds from investors to make all of this happen. And if anybody's watching that I've been doing deals with for I don't know, last 20 years, they will know exactly who I'm talking about. But the main guy, again, he was a service guy. He didn't actually raise any capital. He didn't work with any investors. He hid behind the scenes. Turns out he was also an FBI informant, which got him out of a lot of trouble. But everybody that was raising the capital and was aware of really what was going on, there was a bring in an investor, you're going to get this amazing 20% interest rate. And when the maturity was due, these funds plus 20% were going to be made available to you. And they, in fact, showed that those funds were made available. However, Mr. Investor, why don't you even do it better? Why don't you leave your loan with us? Continue to get your 20% annual return. And so now I don't even need to give you any money. It's just this invisible, machine that's going to create this 20% per year interest return. Tell your friends, tell your clients, go raise some capital. You can take a part of that 20% interest rate for yourself. Well, pretty soon, people figured out they couldn't get their money out. The 20% interest rates was not real. The main guys that were raising capital into this, they were actually aware that there were not the funds to pay the returns, but they kept selling them as loans anyways. And then there was this attorney that was doing truly private placement memorandums, truly treating it like it was an investment, just hiding the facts, misleading the investors. And in fact, that was another big Ponzi. And in fact, they all went to prison over that as well. There was recently another Ponzi in the state of Texas with oil and gas. I do not trust oil and gas. We actually will not represent or deal with oil and gas because of those scams. But it was as simple as, they had these oil wells, they were raising capital, they were paying out other investments that were supposed to get returns through other vehicles. Ultimately, at some point, it all collapses because it was all too good to be true. And a lot of these scams, they may fall under a Ponzi. They may be one of these service company type scams. They do all end up at this too good to be true level. Always providing this amazing return to the investors. We're talking about 20%, 25%. Hey, you're going to get 35% per year. I got to tell you, you're going to make 10 times your money. Well, I hope you do. But the reality is that's too good to be true. And it always is. Yes, there are times and opportunities that are great. Massive returns and sums of money, they really do happen. But for the guys that are running around and, hey, we're going to hit this 30% return, unfortunately, it's not reasonable. But here's how they do it to make sure that the promoters, the issuers, stay out of trouble. They'll usually have a very high preferred return rate. Preferred return is like having an interest rate, but if you don't pay it, it's not like a debt that you default on. And I'll offer, I'm the scammer here, I will offer you a 25% preferred return. Whatever is made, I'm going to have this high preferred return. That's going to go to you first. What I'm not going to show is all of the fees that are getting built into the deal. Because I'm going to go ahead and pay myself 10, 15% of revenue for XYZ as a royalty because it just makes sense. I'm going to get mine because I'm doing the work. But don't worry, whatever profits there are are going to go to you, Mr. Investor, and I'm going to sell you on it's going to be 25%, but that is too good to be true. You're never going to get it. Alternatively, hey, I got this amazing startup company. I got to tell you, it is worth $100 million. It's going to be worth $500 million. Amazing. And all I want is for you to contribute $500,000. But for that $500,000, you're probably going to make $10 to $15 million, even with only owning 1%. And anybody that really doesn't dive in deep enough to really start peeling back the layers of, are they performing? Are they growing? Or is this just another business plan on a hope and a prayer with a good sales guy convincing you that it's going to be this massive return, even though it's this itty bitty tiny piece of the business? Too good to be true. And then the last way that the scammers will hide money is by doing business with related businesses. I have seen a pretty good example of this is I knew this one group that I couldn't deal with, exited as quickly as possible as any representation, and this was before their situation imploded. But they were raising investor capital. They had some businesses that were moving forward. They had legit operations occurring. They were promising these investors a phenomenal 35% plus annualized return. And they also even disclose the related party transactions. They disclose the relationships between the fund, the company that was bringing in the investor money, and these other companies that the promoters, the issuers actually owned. Then they were peeling off money left and right into this accounting firm, into commissions for real estate acquisitions, huge percentages for contractor services. And ultimately, they had all these related parties, all these companies that they really controlled and they got the profits from, were just racking up all of the costs and fees to whatever the deal the investors came into. And of course, inevitably, that company goes belly up. Everybody loses everything. Investors are upset. And I know of one that actually there was even a lawsuit that happened because of it. Ultimately, the company won. They disclosed these affiliated companies and those transactions. They just took as much money as they could while investing into actual operations as little as possible. Ultimately, everybody lost everything except for the promoters, the guys that did the deal. And they got away with it. Nothing ever happened. That's what you have to watch out for, because what they were also doing is they were talking to you, asking you to raise capital, to find investors, to help fund these 7-Elevens that I'm getting paid to develop, I'm getting paid to construct, I'm getting paid for the accounting, but I'm doing it through other companies. You have to get granular and deep in your own due diligence. Start peeling back the layers. If somebody says, no, we're just going to use my accounting firm, okay, that can be legitimate. Let me see the services contract. I'm going to be the general contractor. Fantastic. Lots of people do it, and it's legitimate in many, many transactions. Let me see your contract. Let me see the relationship there. If something is disclosed in the PPM, you can rely on it to a certain level because it's generally summaries. Best practice would be to include those agreements in exhibits. A lot of the times people don't want to do that. But with the summary, there's always those chance to hide what's going on in the background while still meeting the legal obligations of what to actually disclose and talk about. So that is another protect yourself, and always remember, if it sounds too good to be true, it always is.